JB Knowledge Podcast Network. On episode 35 of the Insurtech Geek Podcast, talking about actionable insights from unstructured data with Sai Raman from CogniSure AI. The Insurtech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing the minds behind the innovations that are driving technology in Insurtech and doing deep dives into specific technologies that we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Another week in the fourth quarter of 2020, Rob Galbraith. The fourth quarter. This nutty year is one quarter away from being done. I don't know about you, but I'm not going to shed a tear when we cross into 2021.
No, I think we're all ready for this to be to be over. So I don't know, James, if I've told you about our political yard sign that we have at my house. So it is not for President Trump. It is not for Vice President Biden. It actually says Giant Meteor 2020 just ended already.
Exactly right. I mean, that's the general sentiment this week, in particular after the presidential debate, is let's just get a meteor and finish this off. Right? It's like it's a dumpster fire heaped on a dumpster fire. It's a crazy year, and again, we try to stay super apolitical on the show in general, and of course. There's nothing more apolitical than a giant meteor. So I do like that, Rob, and I agree. It's been a weird year. I think the only saving grace has been that we've had college football back towards the end, and I went to the very first season opener. Texas A&M played Vanderbilt, and we managed to barely win. And you could tell how distracted the players were because it was just a weird game, weird vibe. But an Aggie victory made it taste a little bit better. And with us today, Sai Raman. Sai, it's good to see you. Where are you joining us from today, Sai?
Chicago, James. How are you?
I am doing really well. I love Chicago, in particular in the summer and the early fall. I'm a rabid Cubs fan, and I love my Windy City, so I'm glad you're joining us from there. It's a beautiful time to be out there in Chicago, isn't it?
Yeah. I think it's getting cold, but Chicago in summer is, you cannot ask for more.
Yeah, exactly. It's really nice up there. So glad you're joining us today. Before we get started with our interview, don't forget you can subscribe to the Insurtech Geek Podcast by texting Geek Out to 66866. Make sure you never miss an episode. And now back to our special guest, Sai Raman from CogniSure AI. Sai, we're going to talk about CogniSure. We're going to talk about just technology in general and what AI really means, what portion of AI you're using, because no one's created general AI that we know of yet, right? We're all dabbling with specific forms of artificial intelligence. But I want to talk about you for a second. You got your bachelor's in Andhra University in India, and then you went to Madras for your master's in engineering. And then you worked at a bunch of companies I'm super familiar with. You worked with some very, very large Indian outsourcing and consulting firms, Tata, Cognizant. You worked for several years over at HCL. Did you obviously had a bent towards engineering from a very early age because you majored in it and then you started doing engineering and technology practice consulting. So what was it about that really attracted you when you were a young kid growing up in India? What made you want to be in engineering and go work in technology?
See, when we were growing, actually, the word technology doesn't exist. It's engineering or medicine. We had two choices, and engineering was cream. Getting into engineering was really tough. So it's a challenge. So I want to take that challenge and at least get the engineering degree.
And once you got in, I mean, you jumped straight into be a consultant role with Tata, which they're a massive company now. I mean, they're just enormous. What practice area were you in there?
Yeah, so it's interesting, right? Actually in India, 96 to 2000 was that Y2K rush. So because in US, that's when the actual Indian IT got the momentum. Or you can call the tipping point, right? So a lot of people like me who never thought about information technology got the experience like the startups and, the Infosys of the world started. And, we were all excited. Mainly you can travel abroad, you can work on multiple projects. So my major was mechanical engineering. And, in IIT Madras, I was doing research on welding technology. My specialization is welding technology and engineering. And then I got an opportunity to be, in TCS as a software engineer. And that's the way it started to be an IT.
Well, that's a pretty big difference. So you spent time studying orbital welding and TIG welding and
TIG welding.
And you're like, okay, let's just jump into software.
Exactly. Yes.
Yeah.
It's interesting. When I jumped into the software, I came to US in 97, and my first project was working for Target. That was Target Corporation. We were supporting their systems. And then I went back to India, and then they made me a project manager for an insurance project. So I always tell this story how I became an insurance person, and not by choice, but it just happened. So I was the project manager to integrate two company systems. And, I have a 30-member team, and I have no idea what we are doing, or neither 30 of the people. So we are migrating policies and contracts and claims from one system to other. And we used to call file names, PremSum, PolSum. 6 months into the project, we realized, PolSum means it's policy summary. PremSum means it's premium summary. So it was such a mess. You as a project leader, you don't know what you're doing. So I thought, okay, I need to understand insurance. And that's the beginning of my insurance journey in, I say 98 or 99.
Yeah, I mean, it's how many of us in technology got into in any industry we worked in. I jumped straight into running a software company right after my senior year in college. I had no particular industry expertise. I'd only done 2 internships with PricewaterhouseCoopers. So I had 6 months with a big consultancy, and they put me on some very interesting projects that I worked on, but I kind of knew what that was about, but had to kind of figure it out. And then I end up in insurance 3 years after I opened the company, and it's same thing. Like, what's a policy? What's premium? I got 2 business degrees. I didn't get engineering degrees. I got an undergrad in accounting, a master's in information systems. They taught us nothing about insurance in the business school. And so I didn't know what policy and premium and claims and all of these things were. And it's funny because you literally interpolate it from like field names and like table names and your SQL queries. And you're like, oh, okay. So it's a totally different way of learning the industry, because you're learning it from like it's like learning how a body works from sticking a microscope inside someone's body. You're looking at like, oh, okay, I see how this all works. It's a wild way to learn a business, but it's certainly you learn it pretty quickly because you have to learn how the data flows through an organization. Right. And that's a big challenge.
Yeah, I think the way I see quickly those days in India, if you are a technology person, you are like one project to other. Like, from one day you are in manufacturing, the other day in retail, the other day, because you are a developer, like COBOL developer or Java. So first thing I did is I went and when I went to UK, actually as part of that project, I went to UK, and then I took the certificate in financial planning. I'm actually a financial advisor in UK. I thought that gave me all the financial products. And, I was the first person in TCS to get that certification. Those days, domain is not there. Everybody was talking about technology. So when nobody was talking domain, when I started talking, so they made me a domain expert and helped me stick to insurance for the next 20 years. So I'm very glad that happened, actually. That is the way. Otherwise, you are not going to learn insurance just by doing projects. You need to make a conscious effort to really. So when I came to US after that, I took the CPCU. I did my accounting and finance and insurance. So learning insurance doesn't come just by doing projects. I think you have to put a lot of effort to really understand deeper of the industry. So that's what I did.
Yeah, that's awesome. Rob?
Yeah, so James mentioned some of the big companies that you've been a part of, but now you are the founder and CEO of CogniSure AI, an Insurtech startup. So I definitely appreciate spending almost 20 years working at USA, working at a really large company, and then kind of going out on my own, like the differences. So yeah, tell us a little bit more about what made you start CogniSure AI. What were the business opportunity that you saw? And then I know you're focused specifically on helping loss run automation and standardization as an early use case. So maybe you can share why that is one that you began your focus on for your company.
Sure. See, I think as I was working with all the Indian companies, see, it's more of James, you are also asking about my outsourcing experience, right? See, the India has gone through labor arbitrage. It's labor arbitrage. So now the world is started thinking about the automation arbitrage. It's more digital tools. So a couple of years back, I started, okay, I want to find out a problem in the industry which was never solved and it's worth solving. So my initial thought was, see, as an individual, as a homeowner, am I covered for all the risks which I'm exposed to? So then, how do you find out if there are any coverage gaps in my own scenario? And only way you can see is you need to look at your policy, and then somebody says, okay, you don't have this endorsement, you don't have this endorsement. I thought, if I'm able to come up a way where somebody can say, look, these are your coverage gaps, these are the gaps in your protection, and these are the severity and probability of these risks, it will be great for me as a consumer. But it's not there. I cannot check what coverage gaps I have in my policies. And you live in Texas, and 70 to 80% of flood claims, people don't even know that it's a separate policy. Or even, especially in Illinois, the water backup endorsements in basements. So my initial thought was, how do I find out coverage gaps in the policies? Or what is a protection score, like similar to credit score? What is my protection score? Where are my gaps? So then immediately you are dealing with a PDF policies. What I have is my homeowner's policy, which is a PDF. Or I wanted to read the policy and get me do I have this endorsement? Do I have this limit? So that started me on a journey of, can I actually get what I want from these documents? Because they are non-structured, non-standard, unstructured. So that's when I started as an experiment, and I found out that it is I was able to solve that. It's not easy. It's you need to understand a lot of contextual knowledge of the contracts and policies. Once I figured out a way to do that, bingo, then I said, okay, then there is a lot of potential. Then I started looking and talking to broker tech ventures and all. Rather than going to the personal lines initially, why don't I focus on the commercial side? And then when I looked at commercial side, the biggest problem in commercial lines is the loss runs. Nobody has touched it because it's extremely complex. And it's a massive one. So my starting point is this complex enough? Nobody is there, and I want to try whether I can solve it. And that's the way I started with loss runs.
That's great. I mean, let's talk about CogniSure for a second. Like, just give me the 30-second elevator pitch. If you had to explain to someone very, very briefly what it does, help me understand.
See, CogniSure is basically actionable insights from unstructured data. Unstructured data in the context of insurance being policies, loss runs, quotes, submission emails. So
basically all the data.
All the data. Millions of hours are spent, and how can I see? A lot of companies are focusing on extracting the data. I say it's a part of the problem. You extract it, then you need to understand what it is so that you can you can act upon the data. So my goal is, CogniSure is just not extracting. It is rationalizing, normalizing into a common industry format, and giving you actionable insights into the data. If you give me a 100-page loss run, okay, so if I give you JSON, so what good it is to a business user? It's no good. So I need to put that into a context saying that, okay, your workers' comp claims because of these causes are high. So you need to focus on, it has to be converted into actionable insight. So CogniSure is a company which can convert the data and then normalize it and give you actionable insights.
Awesome. And look, when you talk about unstructured data, that's why I said that's basically all the data, because there's so much unstructured data in this business. I mean, the policy is a contract, right? And it's a lengthy contract, and it's complicated. And then all your claim files, there's tons of bills that come in, and then you have tons of journal entries and diary entries and transcripts of phone calls. And then it's just mind-boggling how much unstructured data are. If you have a claim file, there's photos and video, and you can really dive deep. I mean, just in the policy itself, you have the policy and all the endorsements, and then there's just unstructured data heaped on unstructured data. This entire industry from the very beginning of it, thousands of years ago, has been built on contracts and documents, but not contracts and documents that were in standard forms, right? I mean, it was.
That's right.
I mean, and that's really where the rubber hits the road in insurance, is all the little details and the gotchas that you have to read, or that hopefully your broker's reading when you're buying insurance. It's really complicated, and so we've seen examples of financial service industry, like there's an example of JP Morgan says they saved 360,000 hours a year by applying machine learning, some specific forms of AI, to reviewing loan documents. And what they're looking for is, basically, there's a lot of menial work in the financial services industry, in both banking and insurance, of people just looking for very specific language. I know that CogniSure is not that simplistic, right? Where you're just looking for specific language and how it's structured. You're actually trying to develop trends. Are you trying to get into like reserve recommendations and policy recommendations? I mean, are you trying to do full policy review documents? Like, what's the end deliverable look like in the end of the day?
I have a very large plan, but you have to go through smaller steps. So my initial focus is, like, for example, if you say policy checking, to your point, the goal of a policy checking is to do what? To be able to identify what coverage gaps you have, whether all the limits are right. So you have to be able to do that. Whereas when it comes to loss runs, you have a big construction company. You are, when you look at a history of a company, okay, what do you tell them? You have a 100-page loss run from 3 different companies: workers' comp, general liability, and property. Okay, I have now 3 loss runs and 100 pages. So what do I do with that? So you want to know, do these 3 things so that you can reduce your losses or you can reduce your premium. What I am trying to do is, rather than become a extraction as a service, I want to take one domain initially. Okay, let's take the loss runs as an example. Extract any claim, whether it is a auto, commercial auto, property, workers' comp, and then contextualize to make meaning out of it. So then I will go to the next one. Then once I have the losses taken care, now I'll go to the policy. I can go to the courts. So it's not, if you try to do every document and any document, I can say you're going to fail. You have to pick up one. And my battle I picked up is loss runs. So let me focus on loss runs, because there are millions of loss runs are floating around and nobody has a solution yet. So that's my focus right now. But I will launch into a lot of other things. To your point, there is a community aspect also. Like, let's say if I have more and more loss runs, I can tell you, let's say this class code or this industry, on an average, this many claims. But why are you having many claims, more claims? Today, there is no centralized claims. And if I succeed in aggregating a lot of claims data in commercial lines, I can give more powerful insights, which doesn't exist today.
And what's the end benefit result for the company? Let's say is a carrier buying this? Is a TPA buying this? Is a broker buying this? And if so, does this make them more profitable? Does this actually drive lower staff time?
Yeah. So brokers are buying this because brokers, for example, if you take their largest customer, they have anywhere 3 to 4 policies or 3 to 4 loss runs, and it can be 50 to 100 pages. So they don't have a way to see all that loss data in one shape, so they can advise them on loss prevention, reducing the premiums, and actually guiding the customer about their risk mitigation strategies. So today, for them to understand the historic loss data, they don't have tools. That's why brokers are super excited. The second one is underwriters are looking at, broker is again sending the same loss runs to underwriter. Underwriter is trying to see, can I issue the policy or do I need to decline this coverage because this guy is too risky? So they have to spend so much time again reviewing these loss runs. So underwriters are buying in terms of reviewing the submissions, and wholesalers. So the entire industry, risk mitigation, loss control, loss prevention, everybody has a view into your historic data of claims so that you can actually make a lot of meaningful decisions, like reducing losses, preventing all that.
Awesome. Rob, I know you have a question about brokers.
Yes. So you mentioned that being part of the initial cohort for Broker Tech Venture. So just kind of curious a little bit about your experience. And obviously, a lot of carriers have been trying to partner with startups, and I know you're exploring those on the carrier side as well. But yeah, what attracted you particularly to work on the broker side and to kind of focus there? And then again, I would love to hear more about Broker Tech Ventures.
Yeah. So my whole life, in the 20 years, I think mostly I spent with carrier side, especially the policy admin, claims billing. So last 2-3 years, I got a chance to work with brokers, and I said, oh my God, I think brokers, they have not invested heavily in the technology. And the other thing is, see, the industry is always focused on product. I'm selling this product. Nobody's thinking from a customer standpoint. I am customer standpoint. Okay, this company is selling auto product or workers' comp product. So Broker Tech Ventures, I thought, is the best way to understand the customer, because broker is trying to help the customer. And that priority or that focus is missing in all the digital initiatives of the carriers. They are more interested in, how do I underwrite better? How do I have an efficiency in my system? So Broker Tech, I thought it is a channel to understand the customer better, because broker is close to the customer. So that's I said, okay, I'm going there. And then when I show the loss run, he's looking from his customer's eyes. What can I tell him? Tomorrow, if premium goes up, I should be able to look at and say, yeah, you have to control your claims. So I think BTV is a very, very powerful accelerator there in the market, number one. And because they are not too large brokers, right? It's like their investment and time is significant, and they're really working in pilots. I do see they want you to be successful, and they are working, and it's different, and a lot of involvement, and you learn a lot. So I really enjoyed being part of BTV, and there is tremendous value, and you see a different angle. If you are in insurance, mostly you are from a carrier side, but you go to a broker, you get a different perspective of a product or everything. So that's what is very, very important, and I really liked it.
Okay, so let's talk about what's next. What's on the horizon? Because right now what we're doing, I feel like we're in the infant/toddler phase of AI, right? We're learning how to use machine learning and software robots, and we're learning how to teach machines how to learn. We're letting them learn, and we're using the output to automate a lot of really boring menial tasks we don't want to do anymore, and to identify trends that we don't have the time to analyze, right? Like there's just an incredible, we don't have the budget available to pay enough people to sit and peel through unstructured data to get any information out of it, which means we've got really untapped exabytes of data that have never been analyzed before. Like one of the things that really excites me, honestly, is the potential to go back and back scan historical documents, or take, and I've been watching some other machine learning and AI companies doing this. They're taking document repositories, really old case files, old claims files, old records, going back 10 and 20 years, the ones that have already been scanned in, and then they're using natural language processing, and they're ripping them out. They're using OCR technology, and then they're actually analyzing all the notes, and then they're correlating the notes to outcomes, and then they're looking at old policy documents. I mean, so there's a lot of work going on right now. There's hundreds of millions of dollars, if not billions of dollars, really chasing some really big problems. And so that excites me, because what's going to come up is we're going to learn how to identify key drivers in the cost of risk that we really haven't been able to identify yet. So knowing all of that, what's on the horizon for you? Because we've talked about where you're at right now and what we're doing right now, but what's next?
See, I personally think, right, what is missing, in my 20 years of insurance experience is the customer view. So I always ask a question. If you go to a business owner and ask, are you covered? Number one, for anything that can happen to you, are you covered, or do you know what you are not covered? See, I am thinking this unstructured data, if it can make a difference to the end customer. See, there is industries will spend, like, underwriters will spend a lot of effort, but how can we see what is the purpose of insurance? Is it is shifting from indemnification to prevention. Can you prevent the losses from happening? So I would say the what is next for AI is, it's just all about preventing the losses from happening, rather than how do you have all this unstructured data. So I think I would say the more focus is going to be shifting from indemnification to prevention, and technologies like, if I know, if, for example, I kind of myself saw that, okay, I'm in a zone where there is a risk, earthquake or mining risk, right? I don't even know that. So basically, if I know, what can I do about that? Or, what kind of a coverage should I have? So what I'm trying to say is, more the insurance has to start focusing on more the impact to the consumer, because the carriers are always thinking about, okay, I implement a guidewire platform, so it's not going to make a difference to me as an end customer. So I would say the next few years, it should be like, even in your construction, I have seen how the construction industry can benefit a lot. Like,
Oh, it's
there
amazing.
are so many things here.
So many things. And it's an endless, you're one of the most inefficient industries on the planet. People in insurance say that they're inefficient. Not even remotely close to construction.
Yes.
Construction has razor thin margins for a reason. One of the only industries on the planet that over the last 40 years has not upticked at all in productivity output versus ag, manufacturing. Everybody else has increased productivity, not construction. And so there's a ton of money chasing efficiency over in construction right now as well.
Yeah, no, because even in the insurance companies have an interest, right? I think what I see is, insurance companies right now, rather than I write a policy versus what is future to me, is how do insurance companies collaborate with the end customers to prevent losses and make them better, rather than, I have a policy, I'm getting a premium, and you go and do whatever you want. Because you're absolutely right. I think construction, I had a special interest for construction, and when I looked at a lot of research, as I mentioned, your report was amazing. JB Knowledge Report was the only report I could find a lot of statistics around constructing. Less than 1% spend. See, insurance can drive the construction industry. Okay, if you implement this technology, it's win-win. You benefit, and as well as me, because the highest claims happen in the construction industry. So I think to your question, the collaboration is going to be shifting to prevention, collaborating with the insureds to make a different ecosystem is what I'm hoping for, but I don't know when that is going to happen.
Yeah. On that note, Rob.
So, Sai, I'm real interested, having seen your software and seen how it works, and your capacity today to take loss information and not just take it from a PDF and structure it and create, fielded data and summarize it and be able to identify the causes of loss and things like that. But you actually have dashboards, you have analytics, like you can boil all that up to kind of a one-page summary. You mentioned kind of an underwriter before, but both from a broker side to help advise our clients, and from an underwriting side to say, is this a risk I want to accept or not, and possibly applications and loss control as well. So kind of a two-part question here. Number one, maybe you can talk about that added part, because the part to me that's really new is not just going from the unstructured to structured, right? But you are actually creating the intelligence, right? A lot of maybe carriers are able to do that, or they've got data science teams or whatnot. But you're making that easy, for your customers to be able to gain those insights. So, what extra steps do you have to do to basically create the analytics? And then I'm curious, as we talk about unstructured data in general and how much there is in insurance, are you purely going to be focusing on documents? You talked about policy language earlier, or are you thinking about images, video? Are there other things that are on your roadmap that you'd like to do in terms of unstructured data and insurance?
Yeah, so I think the two-part question. Your first question is, what do I need to do? First thing is, every carrier has their own structure, their own format. So your first step is rationalizing into a common common format. I think that is the brokers are suffering because of that. I have a customer A, I have 5 different loss runs. For me to really get a complete picture, that's my focus. It's once you extract it, how do you rationalize to a common format, a policy type in this one and this one? So then only you can do insight. So a lot of companies, if you don't do that rationalization, it just I give you data in a different format. So which is also going to die. I think, if insurance companies start doing that APIs, you already have a structured data that you are converting into a PDF and giving it. Now, if you start giving directly the API, but still my value is the normalization. So that is the first part. I think the second part is, am I going to start thinking about images and, video? See, right now, again, it's use case to use case. If you are going to look at a use case, for example, coverage gaps, right? I was thinking about, okay, I can go and take pictures and upload. Then I can immediately say, okay, you have some valuable paintings. Or can you, based on the images, can you recommend, any additional things? See, there are so many things, but image recognition and all, like Google's and Microsoft's are already much, much ahead of that. Or even that NLP, natural language processing, right? If you are a technology company, you can never beat them. They are much, much ahead. What my focus is contextualizing that data to insurance. I think that should be the focus. For me, yeah, image is there. Okay, what does that image means to me from an insurance context? So my focus is right now extracting and contextualizing and making a meaning out of that, so that there is a value to everybody, insured or broker or an insurance company.
That's awesome. Well, thank you. It's been a great discussion. I mean, I'm excited about the future of machine learning and artificial intelligence. I'm excited about the untapped potential of getting into all these documents and really started bringing some normalization. I used to think there was hope for standardization in insurance. I've given up. Right? It's not. I mean, and I'm not a defeatist. Like I'm an optimist. Like I think the now, even with COVID and all this other stuff, I think the now is great. I think the future's better. Just my general rule of thumb. But I think there is literally zero hope for any semblance of standardization in the insurance industry. And so I think the only hope we have is for technology to bridge that gap, and solutions like yours that are going to do it. So hang with us for a second. Rob and I have got a couple of news items we wanted to talk about. And I'm going to open up by talking about the Insurtech market in general. Now, look, I don't cover a boatload of funding announcements, et cetera, but there's been an incredible amount of activity in the Insurtech space in general. And I think it warrants some discussion. And this is from the Daily Chronicle. Insurtech market is booming worldwide. Go Bear, Insurion, Side Objects, and more. They're really there's some good research projects. Now I'll let y'all. This will be posted in the show notes. You can get it. Rob, you are, and you've been friends with these folks for a while, and I've been getting to meet this really fascinating network of folks that exist in Insurtech. There's a lot of funding activity. I mean, there is a lot of funding activity, and it does not appear to be slowing down. Low interest rates are actually pumping even more money into private equity right now, looking for better returns. The public market is so chaotic and so psychotic that people are saying, you know what, we're gonna have a better ride over in private equity, and we can't just leave our money sitting making 0.04% in the bank. Or even negative, theoretically negative rates, which is just mind blowing. And so it's creating this juiced private equity environment. And you've been tracking this pretty closely. It's been active.
Yeah, it has, and I think it's almost returned to the pre-pandemic levels already, right? Even though we're still in the middle of the pandemic, we just learned last night, now that we're recording, that the president. The first lady now tested positive for COVID-19, so clearly not out of the woods in terms of the pandemic. But you're absolutely right, James, in terms of it's money looking for a return. We're in a super low interest rate environment. We know that insurance companies, as well as private equity, need to find a return. That's how insurance companies make money. They have operational gains and losses, but they can always kind of try to be sure that they're going to get some investment gains. So part of it is coming from the companies themselves, right? Carriers, reinsurers, and others, and some, of course, from VCs. And then the other part, I think, added on to that is we've seen some successful exits, right? So we've seen some of these IPOs that are coming. that have already happened, like Lemonade, that are lining up. We've seen other exits like, Aon buying CoverWallet and things like that. So, however they're happening, like we've had a series of exits now in 2020 that really is proving the value of these insurtechs. And so I think, it's clearer than ever, right, that this is a really hot space. So whether that will continue or not, who knows? But it's not a surprise to me that the activity has really picked back up.
Yeah, and it's I don't expect it to slow down largely because of the you have to pay to what's the old saying? It's the economy, stupid. It's all about the economy and it's all about returns. And as long as returns suck, money's going to flow into private equity, and then they're going to. The same thing with insurance. I mean, you're going to have a harder market. Premiums are going to come up if their investment returns are in the tank. They got to make it back up on their on their premium, and that's one of the reasons you're seeing, of course, some movement in that area. Rob, you've got two pretty interesting news articles. What do you got today?
Yeah, so actually, kind of a shout out to a group that has been working. This is a new startup called Be Atomic. They've been around for about a year and a half. Seth Zaremba and Sydney Rowe work there. Actually, a buddy of mine, Pat West, just started working there as well. So these are folks that have been in the independent agency space for a long time and saw the need for a new technology solution for agents. So their product's called Neon. They just launched on Wednesday. Ryan Henley had a big show. And so I'm including in the show notes a link to the YouTube video of the whole launch. It's almost an hour long, but they go by the hashtag Indie Tech. And then they say it's agency tech that is created, by agents for agents. So congrats to them. Something definitely to check out. And then big headline this week was Allstate announced that they are laying off 3,800 employees. It's about 8% of their total workforce. So we're going to include an article in the Wall Street Journal, but you can find it in insurance journals and elsewhere. And so, yeah, very, very interesting times. I think this is not the first time we've been talking about layoffs in the sector, James. So that continues even at some of the larger companies. So definitely the economy and, more turnover really of employees. We know that insurance is a very tenured workforce. And we know that as people leave the industry, whether voluntarily or involuntarily, that they're not all going to be replaced by people, and AI is certainly going to fill the talent gap to some extent within the insurance industry.
Yeah, it's a pretty wild ride that auto went through and is still going through, because they had this sharp reduction in driving and then this massive return in driving. And then they thought they were going to have a lower total claim dollars, but then severity went up. And so they really got I almost feel like they moved too quickly to rebate people. They really did. I mean, because they did it. They distributed $1 billion to customers through their shelter-in-place payback plan. $1 billion. And it was like, man, that was really premature, because you have, I mean, they had fewer auto accidents for a very short period of time. It might have been a month and a half, but then severity comes up, then driving comes back in force. And they're kind of caught flat-footed. They'd handed out all this cash, and mind you, this is just 2 months after they bought National General Holdings Corp. for $4 billion in cash. So they laid out $1 billion to the customers, $4 billion in a cash acquisition. Net income increased 50% to $1.2 billion in the second quarter. I mean, it's a weird story, and I follow these pretty closely, and so do you. And I still can't quite make heads or tails of all of it. I don't know, Rob.
Yeah, interesting times. And I think, we've been talking about automation with Sai. So I'm kind of curious, Sai, AI, getting rid of jobs, right? That's been a big talk. So I'm just curious if you have any thoughts on, what the future of AI is going to be. Are we going to be a jobless economy, or what's the impact for employment in the insurance industry from your perspective?
Yeah, actually, very interestingly, I don't know whether you read this Harari's Sapiens and Homo Deus book, which is a very popular book about what happens to human beings because of all the automation, right? It's one of the fascinating books if you have to read. I say Sapiens and the Homo Deus. So he gives an interesting perspective. Don't focus on jobs, focus on humans. So, human needs. So it's not about, what are their needs. So it's this whole book is all about, sometimes I shut down my insurance and start reading these books to see completely different perspective, like a human angle. So automation and what, it's just not about the one industry. He's asking, one fundamental question that, look, planet Earth cannot survive the way it is rapidly growing. So Homo sapiens, the reason why so many species evaporated, but we existed and we are thriving, what is the reason? So what is going to, it cannot sustain, so that there is what happens and how this automation is actually a threat to the whole humanity. And if you don't do anything about that, the Homo sapiens are going to be gone. And then he's talking about Homo deus, who are like human gods. They will destroy the sapiens because they don't need, because what is the purpose of a human being? So it's an interesting, whether it is right or wrong, but there is an interesting view. So to answer your question, so I think, on an immediate, in the next few years, I don't think, there's so much, it's like people are looking for more help rather than replacing a lot of jobs initially. But I think that's a more broader question of effect of automation and the human species is what is recently, is actually a lot of interest to me. And I am not an expert. I'm learning a lot, reading those things, and it's fascinating. It's fascinating as a whole concept.
Yeah, I mean, I tend to be a utopian and not a dystopian on the future, and I tend to believe that things are going to be getting better, that the future probably looks a little more like WALL-E than Terminator. We'll see. I mean, only time will tell. Elon Musk has issued a lot of warnings around automation and AI, and he's a pretty smart dude. I like. One of my favorite quotes of Elon Musk: "The greatest," and you'll appreciate this as an engineer, and we're gonna close on this. He said, "The greatest engineering minds of the most recent generation to enter the workforce have been focusing all of their efforts on how to get people to click on an ad." and he said, we're focusing the greatest engineering minds of our generation on getting people to click on advertisements when we should be solving big problems. And that's why he's trying to get us to Mars. He's trying to solve tunnel boring. He's trying to solve electricity, solar and electric. And we have to focus. I just finished his biography. I thoroughly enjoyed it. And he really challenged me to focus on what matters, focused all the engineers. I mean, we have almost 180 engineers at JB Knowledge. We got to focus our time on things that matter. On that note, it's been an absolute pleasure speaking with you, Sai. Best wishes with the business, and we're excited to know you and meet you. And thanks for being on the show today.
Thank you.
And as always, the most interesting man in insurance, Rob Galbraith, endofinsurance.com. Always good to see you, my friend.
Great to see you, James. Sai, great to have you on the show. And guys, another great episode.
Yeah, rock and roll. And for all you out there in listener land, this has been the Insurtech Geek Podcast powered by JB Knowledge, jbknowledge.com. It's all about technology that is transforming and disrupting the insurance world. I've been your host, James Benham. That's jamesbenham.com with co-host Rob Galbraith, endofinsurance.com. Big thanks to Jim Greenlee, our podcast producer, Kara Dalton, our creative producer, and Del Waldeck, our transcriptionist. And thank you for joining us today. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. See you next week.